morning, traders! Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to start the week sharing some of our wave counts. Today, we're going to start with the euro. The euro has been moving pretty sideways since the market opened, but we are in a bear trend. Let's have a look at the daily chart. On the daily chart, I'm looking for a leg down. As you can see, I have here a Fibonacci ratio for the corrective wave. This is extremely subjective using the Fibonacci ratios. If I close my eyes and I start drawing random lines. Okay, there we go. Look at my magic lines. Is there a difference between my magic lines and the Fibonacci ratios? Of course not, right? Because the Elliott wave theory says that the wave 2 can finish from 1%, let's say, of retrace of wave 1 up to 99.9%, right? So it can finish anywhere from this high to this low, right? Anywhere. And also states that can finish near one of those Fibonacci ratios. But of course, if I fill up my chart with lines, with Fibonacci ratios or my magic lines, probably if wave 2 ends and the price departs up, probably is going to finish near one of my magic lines or one of the Fibonacci levels. But that's going to consume a lot of your energy and is going to confuse you if you try to use Fibonacci levels, because you're going to say, oh, we are at the 38.2% or we're at the 23.6 or we're at the 50%, and that's where the price can reject. And of course, it's a huge distraction that is going to make you lose a lot of money. So what if instead of using those levels, we understand price action and we understand the supply and demand behavior that price is showing? When we have a wave 1, I'm looking for an ABC for a wave 2. And that can happen near the 30% or the 50 or the 61.8 or the 78.6, right? So we need to have a clear ABC, a clear zigzag. And when the price is done with the ABC and rejects, from there we can think, oh, that's the end of 2. As you can see, we don't need to have any Fibonacci ratios, right? So in this process on the euro, I'm thinking that we're likely to have the price, let's say, moving down, eventually having a bigger retrace, and then another move down. There are different patterns, but something in common, something easy, is that we need to have a big stop in action in the middle. The stop in action is telling that demand is entering the market, that the market is changing its behavior, and that's where we'll look for a lower low and we start buying. As you can see, this process can happen anywhere. Can happen at the 50, at the 61.8, at the 78.6, at any level. So one of the key things that you need to master when you are using the waves and when you are doing technical analysis is finding when, how, and where you are going to trigger the trade at the end of the wave. Could be if you are following the trend, you're going to find the end of the corrective wave to follow the trend. If you are finding the end of an impulse, you are going against the trend, right? So in the meantime, and of course you can learn all these details by checking our membership, but in the meantime, it's important to understand that we are in a bear cycle on the euro and that we are looking for the price to keep selling off, to keep pushing down, to keep looking for lower lows, right? So we are in a bearish bias. So on the lower time frames, our job is finding the corrective wave to sell it. That's it, right? That's it. Pretty simple. So if we check the hourly chart, let's say, we are in the beginning of that corrective wave. So this is where we are going to spend the time this week, at the beginning of the week, finding the end of this wave 2 to sell it. The wave A is starting, so we are going to have a 5-wave sequence for A. 1, 2, 3, 4, 5 for that A. Then A, B, C, and then 1, 2, 3, 4, 5 for C, right? And that's going to be for the second wave, the wave 2. Once the wave 2 is done, we are going to start looking for ways to selling wave 2 and capturing a big wave 3, always with a tiny risk and a huge risk-reward ratio. So that's the plan. For on the Euro this week, we are going to follow through this in the membership. We are going to go through the example day by day, updating the wave count and updating the setup, of course. Let's have a look at the S&P. The S&P is interesting as well. Let me start from the daily chart. I want to show you what's the main plan here. I'm going to hide some of the waves, so this is going to be clear for you. As you can see here, we have the price rejecting this area, and we have a bearish bias on the S&P. If you have been seeing our reports before, you know that we were looking for the end of this leg. So finally, the price finished this leg and started the sell-off. The target that I have on the S&P is this area. Of course, first of all, this area here, so the 3,900 area. Then we're likely to visit the 3,800 or 750 area. And there, different things can happen. We can have a breakdown of the area and we can continue to the low. That would be fantastic, you know. It would be like my dream trade. I would like to go long here. And the other option is that the price rejects from this area and there starts building wave 3. So as you can see, this area is going to be important in the future. Right now, we need to focus on selling the S&P. That's all, right? On lower time frames. So let's do it. Let's move to lower time frames. On the hourly chart, this week, I'm looking for another low to complete this wave 1. As you can see, we have only a 3-wave sequence on the left. Nothing there, right? There is nothing. And today we're seeing the price trying to move higher here. We have the price accelerating before or during the pre-market. I think we are going to have a leg down today, back to this area. If we break up this high, we need to cancel that plan. If we break up this high, we can have a bigger retrace, you know, something like this before the drop. So, of course, rejecting this area is key. And the bias for the week is to the downside. That's what we are seeing on the higher time frames. Let's have a look at oil. On oil, we are going to have a beautiful setup. Let me start from a little bit far from the chart. There we go. So we started the process of selling oil right here, right? You have been watching that on the YouTube channel, also inside if you are a member in the membership, and we sell it here at this candle. From that candle to this low, we have 600 points between the 80 and the 64. Wow! And the news that I'm bringing today is that here we have a second entry for the end of 2. So this is another chance to jump into the bear trade on oil to capture a big leg down. I'm looking to have a big move down on oil, probably to the 70. Well, at least to this low of the 72. But if we have a nice breakdown, we can accelerate into the 65 or 60 area. So that would be a home run. So I'm adding to my position here on oil, following the leg down. I'm selling again. And seems that we are going to have a nice big wave 3 down here. All right, traders. So that's a plan. If you want to sign up for the membership, for the Elliott Wave Street membership, this is our website. You can visit us on ElliottWaveStreet.com. And under the membership tab, you will see you will find the plans. We have the Forex, the stocks are the full access. You can take a first month trial for just $19. And here you can check all the instruments that we cover on a daily basis, Monday to Friday. So here are all the details. Also, you will have access to the education. So it's a fantastic membership. You can sign up now and you will get immediate access to the videos, to the charts, to the plans and everything. Traders, please have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.